Alrighty. Varun, it has been a long time to get you on WealthTech Unwrapped. I think, I don't know, we're on episode 75. How have I not had you on before? Maybe I just didn't ask, right?
People were still figuring it out. Either I'm Fintech, InsurTech, WealthTech, all tech. So it just took a while. It's good.
It's good to be here. Well, look, if you're in Singapore and you're watching or listening, you'll know Varun. If you're not, you should. Singapore, over the last, is it 10 years that Fintech has grown? How did you... Maybe I'll ask you a direct question. How did you become, I'm not going to say the man in Fintech, but you're definitely the go-to person for Fintech in Singapore. How did that happen?
It was payments all the way in 2015. It was not even called Fintech. And it started from a stupid WhatsApp group created for few people to just figure out what's happening. And I was running a startup that time. So for founders to vent out at each other. And then it was a late evening drinks.
Okay.
Where Swapnendu had just become the head of FTIG, the Fintech Technology Innovation Group at MAS.
Yep.
And I was telling him, you want to really help industry, you need to sit with us outside the thing. You come and join our WhatsApp group. So that's the Fintech Chopal WhatsApp group. And you're like, regulators in WhatsApp group. Okay, let's try. And then it grew from there and it became a place for everybody to come together. At that time, another thing happened in 2016. MAS was looking at the Fintech Festival.
Yeah.
But the problem for was there was 5-6 different groups in industry. And from a regulatory perspective, they're like, okay, who represents the industry really? So that time I just set out to consolidate all of the groups into one. So some friendly, some cajoling, some you're with us because it's good for you kind of thing. And we consolidated everything. So we've created Singapore Fintech Association. So that time, so my job was to bring everybody together, set the damn thing up. Somebody else was trying to claim the trademark for the word Fintech Association.
Wow. For Singapore?
Yes.
Wow.
So going through all of that, there were legal paperwork, lawyer notices, going through all of that, working with regulators, working with everybody to get it done. And on about 8th or 9th November 2016, we launched the ATRR space, which used to be called Lattice at that time.
Absolutely.
With Deputy PM. And the next day was the launch of Festival. So our vision was that Fintech Association needs to launch one day before the festival. And that was the kicking. And then like different versions of association, different presidents keep coming, going. And I'm the constant. I'm the constant.
But you know, it is because so I've been in finance 30 years, right? The idea that a regulator would be in a WhatsApp group where people are kind of not venting. And then, look, I will tell people if you're listening, Varun does a fantastic job about, I'm not going to say policing, but keeping it on track. But it is a group. Like when you started that, when you said, and look, Swapnendu is a great guy and he's been very open. But when you started that idea, most people would have said to you, Varun, don't be crazy, man. You can't have a regulator in the group.
Yeah, they were like, you're destroying the group. And the other thing was keeping media people not in the group. So a lot of media people were like, we need to be part of the conversation. So they were like those tough decisions you take and only history tells you whether they were right or wrong. Because a lot of times people won't be vocal.
Yeah.
And nothing against our friends in media, it's just that people want that safe space,
of course,
kind of thing. And coincidentally, we found like equivalents in Hong Kong. Then I ended up creating an equivalent in India as well later.
Wow.
So now we have an insurance version of that also. So it just created its own prodigies downstream.
Do you think so? Like, how long have you been in Singapore?
14 years.
14. Okay, long time, right? 14 years ago, there was tech and finance, but there was no. In my mind, it was the 2016 Fintech Festival that started this. You know, people around the world see Singapore as the fintech place, right? Obviously, you know, we'll talk about WealthTech in a bit, but let's get into the history of Singapore fintech. I remember, I don't know if it was Roy. It was a guy, Roy told me, we're going to have a festival at Changi, which if you're not in Singapore is in the middle of nowhere for Singapore on a Wednesday. And I'm like, no one's coming. And I turned up and there was 10,000 people. How did that happen? Because that fintech festival today was the world's best, full stop. Was it Roy, Swapnendu, you? How did that momentum get going?
So I would say it was mostly Roy, Swapnendu and ABS.
Yep.
Because ABS played a very, very fantastic role on that. But the whole part was that it was never their festival. for everybody in Singapore, they felt it is our festival.
Yeah.
So whether it's a big corporation, small corporation, everybody felt as we say, it's a kampong spirit, the village spirit of Singapore. It's ours. So everybody said, okay, what can we do to help?
Yep.
So it was first time, if you see, there's no other Singaporean event which is at the global scale. So it became a quasi-national pride kind of thing. Okay, what can we do?
Yeah.
And because if you see other franchises, right, say Amani 2020, that's not tied to a city, right? There is not like a domestic pride onto that.
Correct.
So it became like a national domestic pride kind of thing. What can we do to support you?
Yeah.
And so everybody just threw everything they could at it from that perspective. So you do not see a singular icon around which the whole industry and community galvanizes. So the main part which Swapnendu, Roy, they brought out was that, okay, here's this one flag, everybody comes around that.
And it really, like, I remember coming up there with my little booth, right? And I think Roy called me. He's like, Ned, it's $2,000 for a little booth and there'll be 10,000 people at all big banks. Do you want to come? I'm like, well, yeah, of course I do, right? And then the big banks all came. And I remember at one point on that first festival, we had a queue of people waiting to talk to us. And I'm like, oh my God, no, we told everybody. And today, like, obviously COVID, it sucked. It wasn't great. But coming back to this year, so it's now 6 years, is it? This will be a 7th year?
Yeah.
So, like, it's got up to like 60,000 people.
Yeah.
How, like, it's going to continue, right? Like, how does it, like, it feels like almost the whole Changi exhibition space isn't big enough anymore.
So premise is this, right? Last year, it could not be as big because the lockdown in China wasn't open. So a large number of contingent from China and a lot of booths from China couldn't come because the lockdown wasn't open.
Right, okay.
So imagine, last year was only Western Asia.
And it was still big.
And this time, the whole of North Asia is going to open and they also going to come.
Do you think that, so Fintech Nation, is that let's talk about Fintech Nation. Like Singapore, like obviously there's lots of places that want to be called Fintech Nation. Maybe a little thoughts from you because you've literally created that brand as well.
So the history of that was that I was in Israel figuring it out which Israeli companies we could bring to Singapore.
Okay.
From that perspective. And Israel has a book called Startup Nation.
They sponsor a cycling team. They sponsor, I watch cycling. This Israeli thing, there was like a whole cycling team with Startup Nation.
So initially it was two people who wrote a book called Startup Nation. And that brand was then used elsewhere in different parts of the industry.
Okay.
So it started as a book by two people where they wrote about what Israel is doing, what is good, what is replicable, what needs to be fixed and stuff. And they created the brand called Startup Nation.
Yep.
So when I was back, I was like very deeply touched. So I reached out to Swapnendu and said, Singapore should set it up selves as Fintech Nation. We are already a smart nation. We should put our icon as Fintech Nation because we love the festival, but that's just one point in the year. We need something which is year long.
Yeah, right.
So we set up our thing. And some of the other hubs around us globally, they cannot use the word nation. Because they're only cities. If they use the word nation, we'll have a lot of, there will be a lot of considerations for them to not use the word nation. We can use the word nation and we will not have much people using the word nation.
Well, look at you. You've been thinking about this, right?
So, and then we said, okay, so I wrote like, okay, what are the 3 things which make Singapore as a Fintech Nation? And it was just a fun project and COVID had not just started. And Swapnendu was like, why don't you write the book yourself? I'm like, sure, I haven't written one ever. So I was just still thinking, and then COVID happens. So I used to travel a lot. My travel is all gone.
Okay.
And I'm like, okay.
Let's write a book.
So it started, for the first 2 months, I did not meet my co-author face to face.
Sure.
It was all virtual. And because people were also at home. So I would call people, hey, can I interview you? I called you. Can I interview you?
I remember.
And people were at like, okay, sure. Okay, sure.
What else are we going to do, man?
So we interviewed 70 industry practitioners and everything and became a book from that perspective. And book became a bestseller because again, in COVID, people wanted new stuff. It told them and everybody knew somebody in the book already.
Yeah, right.
So the beauty was everybody knew somebody in the book.
So you want to read the book because there's people, and people like tech, but people like people, right?
Correct. And then it became like a constant, and then people started to come up with more ideas. Like, why don't you do this? Why don't you do this? So last year we did Fintech 65. So people say, why 65? It's the year of independence and it's the country code, so it will never change. Other countries may try to go after a listing called a Fintech 50, 100, or a 30. Nobody's going to touch 65.
65, that's Singapore's.
That's Singapore. So just set up the brand Fintech 65. You own it end to end. And we created listing of 65 women entrepreneurs, 65 product managers.
I saw.
So idea is till 2030. So my vision is till 2030. In 2030, Fintech will be 15 years old. Today at year 7, 8 mark.
Okay.
So it's mid-journey.
Yep.
How do we create 2,000 professionals we can recognize by then? 2,000, 3,000 professionals in Fintech 65. We're writing a paper called Vision 2030, that what should be Singapore Fintech Nation's vision? So what should Singapore look like in 2030 from a Fintech perspective?
You're doing this now?
Yeah.
Wow.
So we're working, iterating on, and there's stuff like, for example, you say captives, right? Should Singapore have more captives? Absolutely. It's a place for capital to be managed, right? Asia does not have as big captive centers. Mm-hmm. Should Asia have MGAs? Should Singapore facilitate some of them? Micro VCs. Should Singapore have capabilities around that? Because today, setting up a whole VCC will have X cost. So, I mean, there's great things Singapore is doing, but okay, what else across the world is the best we can pick and nurture here? So those are the, I would say, the offshoots which come off. And those offshoots, none of them were planned by me. It was more like people talking and saying, so in my new version of book, I wanted to list out how many fintechs have exited. There is no repository of how many fintechs have exited in Singapore.
People would like to know that for sure.
And finally, I started with 8. And then I kept texting people like, hey, bro, did I miss somebody? And everybody would say, oh, you missed that one. You missed that one. 3 days later, I have 40 plus listing.
Because not everything's in tech in Asia, or not everything's on Crunchbase.
No, and also there's stuff which is announced but never happens.
Yeah, right.
It's reverse. So it was announced and it never happened. So so I had 2 scenarios where founder said, remove this. We did not go ahead with that. The investor developed cold feet and everything, and we unwinded the deal. So it was that one also. So of course there's stuff which is not in Tech in Asia or Deal Street Asia, but there's stuff which is there, but it is not true.
You've got to sift it out, right? You got to figure it out yourself.
So imagine in 3 days, it was a grassroots thing. So now people are saying, dude, now that you built it up, can you host it as a permanent feature on your on the Fintech Nation platform? So if anybody wants to see, they can come historically and check it out.
So I'm going to ask maybe an unfair question. You've done all of this with your own effort, right? And you've been at a consultant, you were at EY, now you are at Singlife, which is one of the exited, but now obviously acquired. Like, for me, your role really is like, and I'm going to say, I need a better title than the Singapore FinTech dude, right? I know there's a better title than that, but in essence, at some point, do you ever think about that is what you do full time? How do you find time, right? You do Singlife, you have your own life. This, you do a book, you do the WhatsApp group. Shouldn't this become your all-consuming thing?
See, premise is this, right? I enjoy it. Obviously. Right. So premise is this, right? You play golf, for example. Somebody plays golf, but doesn't mean they're gonna be a amateur, like a pro golf player.
True. That's a good analogy.
So they like to play soccer in the weekend. Yeah. Doesn't mean I'm gonna be in EPL.
You never know, man. You maybe still have a chance.
So premise is I enjoy it, and the real power is the love and care the community gives you.
Yeah, right.
And that is what it keeps nurturing itself constantly. And see, the premise is this stuff I do, right? So, for example, I invest in startups, right? It's known. Then, now that I have the Fintech Nation franchise, we started to do with that brand name. I was already doing it for like last 7-8 years. So the premise was the love, the care and everything when it's an independent, neutral flag.
Yeah, right. Yeah.
So the power of neutrality is phenomenal.
Because it's not your full-time thing. I see what you mean, right? You're doing it because you want to do it.
Because see, my point is this, right? I don't go to anybody to ask for a favor. I don't go to anybody to sell anything on Fintech Nation.
Yeah, right.
So, and everybody knows that I just do it because I enjoy it. I'm not trying to sell a sponsorship. I've never taken money from anybody.
Yeah.
Ever for Fintech Nation. Yeah. There are corporates who may sponsor specific events.
Sure, of course.
But
that's not coming to you. That's not like,
Fintech Nation does not even have a bank account today. They don't even. It doesn't.
Is it registered as a business or a charity? Or
we filed a trademark because we did not want somebody else to take it.
Yeah, fair enough.
And we registered the legal entity because for connected to the trademark, but it doesn't even have a bank account yet. So we don't take money from anybody.
To be fair, and you're right, your neutrality is important, right? Your ability to be, look, I have my own work.
I have my day life. I have my day job. And this is my hobby.
Yeah.
And that's it's all transparent. So, like, for example, there are events or stuff with the companies which will say, okay, I will buy the drinks for the event and stuff.
Whatever, yeah.
And it's hosted half of the times in their offices.
Yeah.
Some month is Salesforce, some month is some other company. That's about it. But there is not like, I'm not going to anybody saying, okay, here are the 3 sponsorship packages, this corporate partner for this category of Fintech 65. I'm not in that business.
Exactly. Okay. So you're in almost a privileged place, right? You get to see a lot of what's happening. What has been some of the harder stuff, right? Because look, let's face it, like over the last 6 years, you talked about the number of exited companies, right? We all know, I'm a founder. Mm-hmm. You've been a founder. You've seen lots of them, right? Getting to the exit is hard. How do you think that fintech could be better? So when I say what's hard, like it's hard getting funding. It's hard getting exited. It's hard choosing the right path to what to do. As somebody like who sees across most of it, like what do you think we've got to fix in fintech? Because clearly, if I look last 5 years, we've thrown a lot of money at fintech. And we don't have a huge amount. I mean, we've got a lot coming out, right?
Yeah.
But how do we make it better?
See, the part better has to be that the companies needs to get outside Southeast Asia. Because in Southeast Asia, your exit amounts. So if you look at fintech exits, leave aside 2C2P and financial deal, everything else has been below $200 million.
Which is small on a global scale, right?
Exactly. And the premise is why? Let's look at why.
Okay.
You'd need a buyer who is large enough to be able to pay more than 200.
Yep.
You do not have enough buyers of large enough size in Southeast Asia. Because if you are only Southeast Asian player, for a global player to come and acquire something here, the largest deal which a global player has come and done here is $70 million.
Which is
either Red Dot or Trade Gecko, you can,
I remember
some similar range, 70, 80, 90 kind of thing, where an international person came and bought an asset, except 2C2P, beating them as outlier. But if you see from that perspective, one scenario is either you have your companies get outside to either Europe, US, and they get to be $1 billion companies. Mm-hmm. Because you can't be $1 billion company doing B2B in Southeast Asia.
It's like when Prajit with Neom went to America.
He went outside. Richard is now going outside. So there are a lot of them which are going outside. Southeast Asia, the lending companies have become unicorns.
Yep.
Because they can operate multi-market, their scale and stuff. And some of them have even acquired stakes in the banks.
Yeah.
So the lending business, yes, it makes sense. But you can't be a remittance unicorn doing Southeast Asia alone.
Which is fascinating because, Southeast Asia with Indonesia, obviously, in Asia as a whole, India, China, but Southeast Asia, there's so much excitement about like Indonesia. But you're right, how many companies, obviously apart from like Gojek and
But that's not a fintech. That's not fintech. That's a ride-hailing company with a financial services division.
They tried to call themselves a fintech, right?
No, because they have e-commerce inside it as well.
Of course.
So the fintech is a part of it, right? But it's unfair to. I mean, it's like saying Apple is a fintech company because they have like buy now, pay later now.
Yeah. So what you're saying is the issue for Southeast Asian fintechs is that the ability to exit, which is what.
And the other part is the public markets risk appetite is low.
It's low right now.
Even historically, for like mid-size exits for tech companies, because tech companies may not be profitable by that time.
Yeah.
So for the risk appetite to list in some of the Southeast Asian exchanges is not there because the local liquidity pools are not there to able to fund it. If you're doing that in the US, for example, you could list for like $400 million and there will be still the pools are there.
Yeah.
Southeast Asian pools are not cross-border. Most brokers here will not in Singapore, no bank, real example, no bank today will allow you to buy stocks in Indonesia and Malaysia.
That's true. That's
no
true.
bank. You will have to go to niche specialist brokers to do it. Your top 5 banks will not allow you to buy stocks in other ASEAN markets.
So you just don't have.
They will allow you to buy stocks in the US and the Hong Kong markets, but they will not allow you to buy stocks. And of course, they have reasons for like cost, compliance, TAM and everything. But from that perspective, you want ASEAN pool to become big, your own largest financial institutions. And it's not just Singapore. You go to a top bank in Indonesia, he will not allow you to buy stocks in SGX.
So when I was at SGX, I had a role. My job, there was, I can't remember what it was called, this idea that we were going to create one ASEAN exchange. Mm-hmm. That was 15 years ago. Still not today, right? The idea that Indonesia, Malaysia, Singapore, and this is what's fascinating, right? So I've raised money in America. And there's always the idea, oh, how's Asia going? I'm like, there's no Asia going. Like you're either doing Indonesia, Malaysia, Thailand. How can we fix that? Because it doesn't make sense. There's so much capital in Malaysia, in Thailand, in Indonesia. There's huge amounts of capital. But you're right. Like it cross borders for property or for other reasons. But in terms of liquidity pools
property is for the super rich guy.
Of course.
The middle class guy, if an average Singapore kid wants to buy go-to stock, he cannot.
But that's crazy.
From his bank, he has to go to a specialist broker.
Of course. Yet we're in Okay, so bringing the conversation back, we're in Fintech Nation, as you have said clearly. Yet the ability to maybe invest in fintech or to learn, and I'd love to bring it around to WealthTech a little bit, still isn't there today.
So the premise is this, right? The regulators have to look at capital controls. One challenge is the scars from the financial crisis have not gone. And I'm not talking the American one, the Asian one.
Yeah.
So a lot of people who were juniors at that time are the seniors now.
It's a great point, man.
So they still have the wounds where they saw their biggest crown jewel banks unwind, where they remember walking to the international multilateral agencies asking for bailouts. So those wounds of capital controls are still there. They still are not confident enough, and for right reasons. I'm not questioning 100%. The rationales. Because you see, it's not that they don't see value of this. They see value, but they also see the risk. So one possible way is if, let's say at an ASEAN level, they create like a special economic zone, which is jointly owned by the top 5 exchanges.
Yeah.
And the special economic zone hosts that exchange. And then all of these tech listings and stuff, and there is a capital corridor to that platform. So something like that is probably what would make sense. Even Europe, for example, does not have like a common pools and everything. Which is why you don't see a very large European exchange from that. So the Deutsche and the Amsterdam and the London are like all separate. Imagine if all of them will combine, they'll be able to stand up to...
And they can do that together. So let's go down this rabbit hole. I really like that. So I had James DeBazio on my podcast. James, obviously great journalist. And we talked about the history of Myanmar hundreds of years ago. And he threaded that into a conversation about fintech. He writes about that. Your point that in 98, the Asian crisis is actually good for Asia today, because what happened then, you're right, means that the banks were well capitalized as we went through the GFC, as we go through what's happening today. If you're listening to this podcast, it's March 2023. The world is not a pretty place right now, whether it's Credit Suisse. Do you think like that kind of longer look at history, 25 years is not exactly history, but the fact that 25 years ago, Asian banks, Thai banks, I was in Indonesia then, the currency went from 2,000 rupee to the US dollar to 18,000 within months. I remember like being in Indonesia thinking, hold on, how is this going to work? I wonder if maybe the success of some of Asia fintech is rooted in the idea that our banks are solid from the beating they took 25 years ago.
So one of the political leader of Singapore used a line at that time. We would not like to become like a specific Pacific country I'm not naming, where they don't have a national bank anymore. They only have 5 international banks now. Because when the crisis comes, the banks who are rooted locally are part of the resilience of a nation's financial services. And yes, there was consolidation, there was capitalization, And some of the banks had international investors. A lot of Japanese investors were there. That's fine. But that part, if you see, that created very strong local foundations from that, which ensured that these local financial institutions can innovate. So if you see some of the best digital banks globally are from Southeast Asia. You see the Singaporean banks, you see the Thai banks, the phenomenal from that perspective. If you see from a concentration of net new licenses, Southeast Asia has more net new digital bank licenses than the United States.
Hold on. Says more new digital bank in Philippines, Thailand, Indonesia, Malaysia than in the US.
4 Singapore, 5 Malaysia, 6 Philippines.
And from what I can tell, and I'm not a digital bank specialist, but not all of them, but some of them seem to be doing pretty well, right?
And I'm not even counting the M&As.
Yeah, right.
Because Indonesia did not issue new, they were M&As. If you count the total number of fintechs buying banks and net new license banking charters issued in the United States, that's less than Southeast Asia.
Wow.
I just gave you the numbers.
Wow.
It's less.
And let's face it, there's more people in Southeast Asia than in America.
And Thailand has still not opened up yet. Thailand banks' licenses are still yet to come.
Is there this idea that, because for a lot of people in these countries that are developing countries, they're not going from, old school from 30 years ago to computer to mobile. They're going straight to mobile. They're going because they haven't had banking in the same way for a lot of the...
I don't think that's a big thing per se. Because if that was the case, that should apply to Africa also. That should apply to India also.
Good point.
So that rationale, rationale should apply to China also for that perspective. That rationale does not apply.
So why are we getting the digital bank growth here?
Because the banking sector's foundations and the regulators understand.
Yeah.
Because they have gone through the pain and cycles.
Get it.
So they know how to handle this.
Yeah.
So it's not that they'll say, okay, we'll issue 25 banking licenses. They're like, nope. And each country has its own style. When Singapore did, they said retail and wholesale.
Yeah.
But when Malaysia did, they said universal and Islamic.
Of course, because that's relevant there, right?
Right. When Philippines did, they said universal only 6. And of course, there are other rural banks kind of thing. This. Indonesia said, we'll not issue new licenses, but we will encourage consolidation and aggregation for leveraging existing things. We have enough. You clean them, fix them, scale them. That is encouraged, but we'll not do new. So all 4 markets have totally different flavor. What is right for them?
That makes sense. Because, like in Singapore, if you said, okay, just, clean and fix the local banks, they don't need to be clean and fixed. They work great. Well,
exactly.
Apart from DBS yesterday.
But you see, there are not too many. You have 3 local. So you do not have 50. You have 3. If you look at Indonesia, you have a lot more. So you can pick out a few. You can build something, consolidate them, do something. You only 3. So you see, each market has its own unique flavor. Same thing for wealth. Each market has its own unique flavor. Singapore has global wealth center.
Yeah.
Massive global wealth center. Family office is one of the fastest growing family office.
Crazy.
You look at Indonesia, it's very different.
Yeah.
You have some level of capital controls. You have some level of onshore. You have some level of offshore. You have large family businesses. You have large emerging middle class. You look at Thailand, it's another flavor because they're the banks, the brokerages, asset managers it's a very niche ecosystem there.
Yeah.
It's a very niche ecosystem there. And they can invest for long term and stuff. And they were some of the earliest to support crypto, for example. Some of the earliest crypto exchanges and stuff were there. So they were coming from I would say, slightly different flavor for that example. So you see, even if you look at wealth, each market understands what they can do. And which is why when I say, okay, Singapore should look at captives or MGAs or micro VCs, that's my view. But if you look at from a broader regulatory view lens perspective, this is, we could do a million things, but we have to package them into like, okay, prioritization of what achieves the largest national good.
Yeah.
So for example, SG Findex was a priority.
Yeah.
So now you see banks got it, insurers got it. Now the next is wealth from that perspective. But that's beautiful for a wealth sector. If you can have a holistic client portfolio view, which is cleaned up, all sorted for that perspective, that's a Singaporean hack version of open banking. Instead of saying everybody open your API in your own standards,
absolutely.
The Singaporean model is, here's the standard, now you must open to this. And to ensure that it's not that somebody takes advantage of you. They can't sell this data. So you can't self-index data. So it's a very structured way of doing open banking from that perspective, but which sets up the foundation for wealth industry to build a lot of more use cases.
It's very hard to predict the future, as we know. And you said that fintechs, you've got this vision of 2030. Like Singapore feels right now, and as you say, like the influx of capital. I think we've gone from 75 family offices to 1,000, I saw, or something like that. How does it get it? It's going to be hard to focus because, as you say, I like your idea. Indonesia has one way of doing wealth. Singapore has a different way of doing it. Each of them, is there a danger they try to do, each country, do you think they're going to stick to what they're doing, or is there a problem of focus? Because as money comes in, everyone's going to want to do so many different things.
No, premise is this, right? The luxury Singapore would have in that sense is it doesn't need to take that decision. So if, for example, there's some family offices who decide that they want to invest in space tech.
Okay.
That's fine.
Yeah.
They can.
Yeah.
So of course, as long as they're not investing in something which is illegal,
of course,
it's okay.
Yeah.
It's okay. If, for example, the people who say we will build next generation generative AI GPT 100 version, that's fine. That's fine.
The capital is going to power different.
Exactly. So see, the regulators don't need to worry about that. They need to worry about, I say is this, right? Regulators need to ensure that the rule lines and the goalposts are managed and maintained. Somebody likes to do a headshot to the goal. Somebody likes to do a free kick. That's fine.
I was talking with Henry Arcelanian yesterday. We were talking about regulations. You come onto that. It's a super hard job for regulators today. There's new stuff coming up, 10 years ago, nobody was talking about crypto, then nobody about stable coins, even robo-advisors. Yeah. Even robo-advisors is new. How do regulators keep up? Because I like this idea, right? You have a football pitch, you mark the lines, you mark the goals, you can give red cards when somebody does something wrong. I like this idea. But the shape of the pitch is changing pretty dramatically, right?
So the whole point is, their society changes, right? So for example, when from a traditional trading, it moved to phone trading and internet trading, regulators had a hard time figuring it out. They're like, where are my paper records to check?
When I started trading, man, listen, I had the paper, we take the call, we write it down. And every hour we had a person who would pick up the paper, the tickets, and walk them across to settlement. And then when we got fax, we had to show to the regulators why we were using fax.
Yeah.
And you're like, okay, come a long way.
Oh, my dad used to own a stockbroking terminal. We used to have a strong room with the stock certificates.
Oh, you had the certificates?
Yeah. India used to have certificates in 94, 95. You lose the certificates, it's gone.
And that's the reality. So they're all gone today. Did he keep any? I hope he kept some as historical.
Souvenirs. No, because problem was when they converted to DMAT, you had to surrender them. Because when they digitize them, you have to surrender.
You have to surrender.
Because otherwise you will take it elsewhere.
Correct.
So you have to surrender.
It's funny because I remember, so I was stock trading, and I remember because we used to trade India, you would sell a stock, but they would have to physically deliver the certificates.
Yes.
But the certificates were 3 or 4 beneficial owners behind, because somebody would then give it, and you wouldn't okay, this guy's got it. You have to go through all these few, right?
Yeah.
So you're right. Sorry, I interrupted. You were saying.
No. So premise is this, right? Regulators understand newer technology comes, customer preferences changes, they would evolve. But you see, a regulator does not need to run ahead of the industry. They need to follow, because a lot of times industry tries something which does not even work out for the industry.
Okay, so don't regulate it if it's not going to work out.
Exactly. You need it to be a certain state, reach a certain scale for it to be worth regulating. If it is too insignificant in shape, size, and scale, then it is not. That is a prioritization.
I'm going to push you a little bit on this. Yeah. Crypto was nothing, and then all of a sudden it was too big. And so I don't think it's any secret. I have a fairly strong view that crypto's I think it should have been regulated way heavier. Mm-hmm. I was a responsible officer in Hong Kong at E-Trade, right? So I was a brokerage. My name was on the door. Mm-hmm. I had to be responsible. When I look at and there's all this debate, are crypto securities, the Howey test, all this stuff, I'm not get into that. So to your point, regulators should see if it becomes significant and then regulate it. Didn't crypto prove that that's kind of dangerous because it got too far?
I'll give a counter view.
Okay, go for it.
A lot of these are like commodities. The problem of doing that is suddenly you will start to regulate a lot of industries which are outside the financial system. Because people are trading, for example, they are literally trading, manufacturers and suppliers are trading raw materials. And they are literally like quasi coins, it's like, because the physical commodities don't always move from that perspective.
Yeah, they're trading the derivative of the physical commodity.
Yeah.
Yep.
And suddenly you are starting to go into that territory. So you have like a promise of production.
Okay.
And that's very normal for a manufacturer to say that, okay, 20% of my production I will give to you, because if you give me this much cotton, I will give you 20% of my production. That's nothing illegal about it. It's very legal.
Yeah.
And this is all like virtual commodities being traded, because the manufacturing hasn't even happened yet. So the premise is, the moment you say that I will start to regulate all virtual use cases, you are suddenly looking at a lot of these use cases. You're looking at the whole warranty industry. You're looking at the whole air miles industry. Because that is exactly that.
But there's a commodity underneath it, right? There's a physical thing.
What is air miles commodity? What is air miles commodity?
You're right. It is
It's a perceived value in you.
It's a notification on my website that I have 100,000 miles that I can use for some purpose in the future.
And your airline can choose to devalue it any damn day. Legally, and you can't do shit about it. And they can sell you more tokens. They can sell you more miles.
They can.
Right?
And I can buy it with real money, or I can buy air flights or my credit card points, right?
Yes. So then suddenly you have implication on that whole industry. You have export credits. You have service credits, delivery credits. Where service credits are given. So for example, let's say you're in service industry, your service level fell below. You will give service credits to the person, to your customer. Normal, very normal, right? You give service credits. That's an airdropping of a token.
So was the crypto industry something So, man, okay, now you're scrambling my brain here, man. Now you're scrambling my brain.
So you see, I sat down a lot in the deep discussions with the regulators.
Because you've thought about this a lot, right?
Yeah. So the premise is, they're like, people think we can't pass it, but you have to look at what will happen to these 7 other industries, which are not even financial in nature. And you have to look at second order and third order effects of that in those other industries. Spotify, best example. That's all tokens. Because technically these are virtual plays and you're getting money on those. And you're getting points. So in a lot of these gamification of these apps and everything, you do certain activities.
100%.
And you get these coins. So your whole gaming industry, and you can buy. So there are games in which you buy this sword, you get these coins.
Of course.
That's airdropping of coins, when you can purchase new coins also.
My God, man, now you think of it. My son used to play this game, right, where he would buy some coins. This is kind of not before crypto, but he wasn't buying crypto coins.
Yeah.
And it was insidious, man. I remember, like, he was 15. I went to his bedroom. I was watching. I'm like, how does this work? He's like, Dad, this is so fun. So I buy some coins with real money, right? And then I want a new sword. And there's 3 chests, like little treasure chests. And I take some coins, and I put them in one chest, and the chest opens. Sometimes I win, sometimes I don't. I'm like,
that's gambling. In your world, it's gambling.
Yes, in my world, I'm like, so dude, like, you're basically playing a fruit machine with these little coins. He's like, this is so fun. And he's like, And then, like, I watched him put this coin in, and he won a gold sword. He's like, this is amazing. But then he opened 10 other chests to win a platinum sword. Didn't win, obviously. Sucked his coins down. And I'm like, wow. So it's a good point. Like, is that crypto? No, but is that kind of tokens?
Is it gambling?
Oh, 100%, man. I like gambling.
So, and the difference is, there is, again, the industry says there is thin line between what is skill-based games and gambling.
What's a scale-based game?
Skill-based game.
Yes.
Skill-based game. So all your fantasy leagues is now skill-based, because it is your skill on what player you picked. That's a skill. Technically, that's a skill. But what he played or she played is a gamble. So there is a lawsuits going on across the world on what qualifies as skill-based game and what qualifies as gambling.
So if I didn't run WealthTech Unwrapped, apart from running, my other passion is poker. So I am very key. I love Texas Hold'em poker.
Yeah.
There is a lot of, so about 15 years ago in America, we had something called Black Monday, which wasn't a financial one. It was all poker was banned in America online because Congress said that poker is gambling. Now, I believe roulette is gambling. There's no skill in roulette. There is strategies you can use, right?
Yes.
But poker, and again, I'm biased because I love the game, is a skill-based game. I think a better player will be.
People will say the same for roulette. That, okay, you could play 4 4 dices at the same time instead of playing 3 dices, and how far you put, and there's a probabilities, and you're playing on probabilities. So,
but roulette is a rule, and we shouldn't go down the gambling thing. But I understand your point is that that line, something like chess is skill. Chess is skill. Chess is skill. There's no
argument.
But let's say you go to a fruit machine, like a spin machine. There's no real strategy in that. But I like your point that it's skill based. So did crypto cross the line into gambling?
So premise is there were some use cases which went into some use cases. So there were some, so it was not like, so which is why what regulators came up with globally, they say, okay, let's split it. If it is going to be like security, then we will regulate it like security. If it is not a security, then it's a commodity.
Okay.
Simple. You split it into 2.
Securities and commodities.
And they call it utility token because crypto people like to call it utility instead of commodity, but it's still the same thing. Either it's a utility or it's a security.
Yep.
Now there are people who say, oh, I have this where I want a mixed treatment. That I want to be treated like utility, but I want to be traded like a security. That's an expectation.
Yeah.
So where the regulators will have to take a call like, okay, this one can, this one cannot. You can't be both.
Yeah, right.
You can't be both. Because the premise is, if you are both, then you will be regulated as a security. Simple. You can be both. So in theory, let's say a trading gold, you can go and take a physical delivery and make a necklace out of it.
Yeah,
that's fine.
Yeah.
But then you are still regulated. Your gold futures are regulated as a commodity.
Yeah.
But the moment you convert it into a utility, then you can.
It's a utility. It's a gold.
So from a regulator's perspective, it took time to actually go through this and ensure that a regulation will not go and screw up all the ancillary industries, will not go and hit so many of the other industries and create second order, third order effects and unwind them. Because then you are creating panic across other sectors. Imagine something like this happens. What happens to Miles? What happens to gaming? Gaming is a massive
industry.
What happens to gaming industry then?
It's super weird because, again, there's a phrase I like, strong opinions loosely held. I like the idea that you can have a strong opinion, but you've got to be loosely held. So I had a strong opinion, crypto isn't right, but it has to be loosely held because if you have strong opinions strongly held, you never change your mind, right? That's why I love doing this podcast, right? I never thought about like this ancillary issue that you're right, like Asia Miles, gaming, commodities, right? They're busy doing their thing, right? And I've never thought that.
And they're like, we don't care about your Bitcoin.
Yeah, right. It's got nothing to do with them. It wasn't their thing. So does crypto, I hate to say, does crypto survive? What comes out of it, right? So look, I build robo-advisors wealth, right? And today, most of the people who buy, when we sell stuff, our customer is a bank, right? Standard Chartered, Franklin Templeton. And almost always it's mutual funds, equities, ETFs, right? Always. But, we're starting to see people go, I would like crypto. And again, that's not my choice. We're tech guys. What's the right word? Does crypto survive? I think it does. But what comes out of, because look, the market soared down, up, down, up, down. This down feels kind of more real in that it really feels strongly together with the kind of the traditional market kind of meltdown that we're going to have to really get down to real use cases for crypto. What comes out of it?
See, premise is there will some real use cases are emerging. For example, you have stablecoin use cases, right?
Yep.
So for example, a lot of loyalty programs will have ability to use something like this.
Okay.
So, right. So, for example, in theory, in future, 10 years out, you could have air miles also trading.
Yep.
That today, if you want to buy air miles, it's a very opaque industry.
But it doesn't need. Does it need blockchain or crypto to solve that? Couldn't I just sell you my air miles? I know I can't.
No, you can. So, premise is this, right? That is a very, very technical answer. So, for example, do you need, so your database is the best example I usually use.
Of course.
You start with one-dimensional database, then you had Excel sheets, then you had relational databases where you could write SQL queries. But you see what happened that time. Processor became cheap and storage was expensive. So the atomic principles of SQL database was store one data only one time. Because storage was expensive, processing was relatively cheaper. Stage 3. Storage became cheap so that you have no SQL databases. That you could store, you want to render the result fast, it's okay to store it multiple times. Then you have a 5th generation where the network became cheap. Because storage and processing was always cheaper, the network became cheap that you say, I will stream it in the real time. I will not even store it.
Wow.
Right. The 6th generation, technically from that perspective, is where you say, I want to move the processing to be close to the edge.
Close to the edge. Explain.
Of the decision, of the application.
Okay.
So application does not need to send it back. So the idea was smart contracts is an example. Smart contract says the data and application logic will be as close to each other as possible.
Understood.
It doesn't need to go elsewhere.
Understood.
So when you want to go beyond, because if you have problem of video streaming, then you will solve it differently. Social media, you will solve differently. But now when new use cases are coming where they want the data and the application logic to be bound to each other and execute automatically, where you don't need a server-client relationship, that's a smart contract. That's where you have distributed databases. Distributed databases were always there. It's not today. They were there in 1980s. But the challenge, why distributed databases were there at that time was that the network was expensive, and that's why you needed distributed copies.
Yep.
Now the use case of that is you want execution to be automated and application logic to be embedded with the database. So wherever in the industry there is a relevance for that use case, you will use it. But there are other scenarios where you may not need to use it. So the premise is it is useful when there are multiple people who don't trust each other or trust less each other.
Yeah.
There is a graded trust. Then it becomes useful. Air Miles case, because the master issuer is only one.
Of course.
But of course, if there was a scenario of the whole Star Alliance airlines issuing miles across each other and trading them across each other, that time you would need something like that, which is a low-level trust system. It's not a master issuer system. But a central bank currency, you can issue it directly also. But now when they want multiple issuers to manage it, and multiple nodes to handle the decision making, that's when they use a blockchain. So a blockchain on its own is not right for everything, is not wrong for everything. For some use, it's just like cloud came, right? Cloud was not right for everything. It was not wrong for everything.
It had use cases.
NoSQL was not right for everything. It was not bad for everything. Same thing. It is not, there are use cases for it is right. There's some use cases you will all still use NoSQL database because it is just about rendering the damn speed.
And you just need to show the data and that's it.
That's it. That's what it is.
It is this, as we come up towards an hour, and I think we could sit here and talk about this all day, but you have a day job and I have a day job running a startup. How do we bring it all full circle? Because we started about your history in, how you've become like kind of central to Singapore fintech, Singapore growing Fintech Nation, blockchain, crypto. What's your little crystal ball of the next, maybe not just Singapore, but like fintech's a new industry. It is 10 years old, but PayPal was 20 years old. Bloomberg was fintech. But what's your, as we kind of, wrap it up, what is your crystal ball on fintech?
So I would say is the fintechs needs to acknowledge that the fins are learning tech at a faster pace. They will not have all the agility and speed and stuff. Of course, because they have to run it at different scale with governance and compliance. So they need to find their own level of profitability and sustainability. The VC money party will stay, but it will not be forever. For when you are doing a user change behavior, then you have to invest upfront. But then you need to start showing the returns. Because you see, as I say, you are sexy until you are public. The moment you are public, then your benchmarks and your multiples are with somebody.
I know that.
So you're sexy now, but you won't be sexy forever. The moment you graduate out of the high school and you go to the college of public markets, that day you will have to play. You could have a homeschooling in a private equity, but that won't also be forever.
I've tried that as well.
So from that homeschool, you have to go to the next homeschool.
Yeah.
So either you go homeschool to homeschool or you go to public markets, or you are the owner and you are running your own business. That's fine. Then you don't worry about it. As long as you make more money than what you cost, as long as you're making marginal profit and you own the business, then it's fine. Then you don't need to worry about all of this. But if you are taking money from other people to build a business, then you have to worry about graduation.
I think that is a good point to bring it to, is like, are you in nursery, high school, graduation? And I think I met a founder the other day, older than me, which is hard. Well, on average, he's had the business 30 years. He started it profitably. He's grown it. It's profitable. And I was like, 30 years? He's like, yeah, only the first 25 years was hard. The last 5 years has been great, right? So, and I think there's different ways of doing it, of taking VC money, which I think, the party's quiet at the moment. It'll come back, right? Yeah. Private equity, different ways to fund it. Varun, thank you, man. I appreciate it. Thank you for what you do for the Singapore fintech scene. We'll see. And everybody, come to the Singapore Fintech Festival. It's November again.
Yes.
I assume.
Yes.
We should get everybody there. Thank you so much. Listen, I don't let any of my guests go without two completely random questions. There's one I've started to use a lot and I really like. So you've seen Back to the Future, I assume, the film, of course.
No, I haven't seen it.
You haven't seen Back to the Future?
Sorry.
Varun? All right. Well, I'm going to tell you what. It is a film where there's a bit of time travel involved. And a young man gets in a car and the car can take him to any year in the past or the future. I will give you a car. You can get in it and you can set the destination for any year in the past or in the future. What year do you go to and why?
2011. I used to be a programmer and I used to write Java codes and stuff. And at that time, I didn't realize that that tech skills will be that valuable. Now it's still valuable, but if I would have continued to do coding for another 5 years, I could have been a much, I would say, better from a skills perspective, per se. So I quit coding as a full-time job. I still do a hobby stuff, but I quit coding as a full-time job in 2011. I probably should have done mobile coding also. I did a lot of desktop server, but I never coded on mobile. So I should have done that in 2011.
I think if you stayed as a mobile developer back then with the skills today, there would be. I knew you came from that kind of background, but didn't know you were a developer from that side. Okay, last question. If Elon gave you a ticket to Mars, to live on Mars with your family, would you want to live on Mars?
As long as it's a return ticket, sure.
You'll go on holiday to Mars, right?
Yeah.
You don't want to live on Mars?
Too early.
Maybe a bit like fintech, right? We're right in the beginning of it, right? Maybe it's a little bit too early. I think that's a good one. Varun, thank you very much. I appreciate it, man.
Thank you.
Thanks.
Thanks for listening to WealthTech Unwrapped with your host, Ned Phillips. We hope you enjoyed the episode. Join us weekly as we dive into the ins and outs of wealth tech and speak with our esteemed guests about the industry. If you like what you heard, help us reach more people by sharing the podcast as well as leaving us a 5-star review. That's all for today. We'll catch you next time.